Hey guys, welcome back to our channel. Make sure you subscribe and smash the like button. And today we'll be diving into some interesting insight about the current job market. Also, the economy has been a hot topic this year, and recent indicators have suggested some interesting shift that might be on the horizon for 2024. So let's break it down. I have this interesting article to go over with you guys from Wall Street Journal. And job opening have seen a significant drop in October and currently standing at 8.7 million. While this figure is still higher than the pre-pandemic level, it's considered a decrease from the record high of 12 million in March 2022. Despite more jobs being available than they are unemployed, individually actively seeking work, this gap has notably narrowed. So as we can see here, guys, this is actually a career fair in Los Angeles where this picture was taken. And as you can see, less help is wanted. And also the number of job, insurance, real estate, retail have declined over the past year. And business have said that fewer extra workers are needed for the upcoming holiday of this fall. And if we see this trend right here, guys, the lighter one is unemployment and the darker blue is opening. Guys, it looks like eventually it's gonna cross back on the other way. So this crossover here is gonna revert back here somewhere down the line, and it might happen in 2024. We're not sure when, possibly 2025, but a lot of predictions is leading towards 2024, guys. And also another behavior we've seen is workers' behavior. Interestingly, the trend of resignation that surged earlier during the pandemic has cooled off a little bit, and economists interpret this decline as resignation is a sign of worker might be less confident about the job market and perhaps more content with their current role. And this hesitation to leave, their current job is declining, been declining since April 2022, indicating that, employers has less urgency to fill, which giving, employees more confident that they can switch the job, get another one. So workers quitting. Pretty interesting, right? Workers quit quitting. The jump in resignation earlier in the pandemic has dissipated. In October, the quit rate fell steady from the prior month from at 2.3%, but has trended down since touching 3%. And over here we see like the rate where the hires and the quit. So the quitting ticked down a little bit, and the hiring did tick down a little bit. So kind of trends kind of fall. This type of trend kind of follow each other a little bit. And also with what the Federal Reserve been doing was increasing interest rate, and it's really high compared to the 20-year average at the moment. Their goal is to slow down inflation, and by any means necessary, by any cost, and their goal is to slow down the spending. And we've seen it has effect. It should have effect in the housing market, business investments, and consequently the labor market. Notably, industries like healthcare, government, and leisure and hospital continue to have some general slowdown, but it's not as heavy as the other industries. So guys, this is definitely will take a toll on the economy. That's what raising interest rate does. That's the goal of it, is to slow things down, to calm down inflation, and revert hiring will slow down. So they say that it's a soft landing that they're predicting to happen, but we never know what the future holds. Races are getting smaller, so when business were desperate to find employees, they were offered workers raises, signing bonus, and throwing money at their employees. But now they're pleased to be less eager to hire, which of course that's cool. So this is a pretty interesting chart here where the hourly wages is slowly on a declining trend. And here, this is the pandemic. Around the pandemic, guys, this ticked upward a lot, tremendously, but now it's on the way down. It's on the decline. And also finding a job is getting harder. Like we said, right? Interest rates, companies are not hiring as much, so people are having trouble finding another job. Let's say you get laid off, it's taking a lot longer than to get a job now. And nearly 2 million Americans have been applying, for unemployment benefit in the recent weeks. And also economists estimated that the rate is at 3.9% for November, the unemployment rate, and it has risen about half a point since the spring. And such increase usually come right before a recession, so that's a huge increase, guys. And when that happened, it means that a recession is on the horizon. And Are we gonna have a recession? We don't know. A lot of folks are predicting a recession to come, but no one really knows. No one can really predict that a recession is gonna come, guys, in 2024, 2025, or 2026. Hopefully, we don't have a recession because that will cause some damage. But the way that the housing market is looking, standing strong still, all the interest rate is the highest it's ever been in 2 decades, almost. So we're gonna have to see some slowdown in housing, for the people to feel okay, a recession is coming. So, but that doesn't necessarily mean a recession will come. But I don't want to predict that we'll be in a recession. But interestingly enough, the housing market is still strong, guys, compared to last year, January to January, 2023. It's up $11,000 from 400,000. So it's still rising, guys. Housing is still rising, but the demand is interestingly extremely low at the current moment. But people are not selling their homes. There's no homes being available on the market, which is keeping the prices steady. If you see the housing inventory rose, 7.5%, which is good. But right now, to go finance a home, guys, you're looking at 7%, 8%, 9, 10%, depending on your credit score. And that's extremely expensive on $400,000, which is for the average home. So, guys, and economists and real estate economists are really standing still, guys. They still saying that housing will increase. As you can see, could home price rise in 2024? Some extra, projected decline, but most seeing prices remaining elevated and even increasing in 2024. People are still saying we're gonna have a strong, steady prices for 2024, maybe less sales, but people are saying, but guys, no one really want to trade that 3% interest rate for 8% interest rate. It doesn't make sense. So you're gonna stay put in your current home. And I've also run across an article where couples who are divorced are living in the same home and having rules and certain boundaries where each other can't cross, but they can't afford to sell their home and move. They can't afford to find another place, so they still living together and having certain rules and stuff for their kids, which is pretty awkward, but it's a nightmare out there, guys. That's technically pretty much being a housing crisis right now. No one can buy, no one can actually sell. So people are staying put unless, you make pretty good money. You can get up and buy another house without the care, but the average American can't really make that move. So, guys, this is my prediction. I think the interest rate is too high. Home prices have to come down. Eventually the demand has slowed down and the foreclosure ban has been lifted off. So eventually we're gonna see some ticket down, but also the big indicator that fall while the line is the job growth, guys. If job slows down, if hiring slows down and people start getting fired, and according to these charts, looks like we heading there, people start getting fired, and the unemployment rate start ticking up higher, guys, that will cause a sell-off in the housing market. People are going to be underwater under their mortgage. They're going to be forced to sell, foreclosures, short sales. That's going to be, people are going to have to sell a home, but we don't want that to happen, because when that happens, then who knows, you might lose your job and not be able to buy a house, right? So you never know what might happen. So hopefully you can keep your job if something like that would have happened, so then you can buy the house that you've been waiting on. But that affects everything, across the board. So we don't really want that, but we just want the housing prices to come back down to slow down inflation, so the people with equity in the home can stop purchasing, so the Federal Reserve can revert back their stand on interest rate and okay, we're going to lower down a little bit to see how the economy does. But as of right now, the Federal Reserve is suffocating the economy, and they really want that 2% inflation rate instead of 3, 4, 5, or 6, guys, and they really serious, guys. So this what I wanted to share with you guys today on the channel, guys. Thank you for tuning in. As we wrap up, it's evident that the market is undergoing a shift, and we show you various charts and various indicators towards a cooling trend, potentially impacting employment and economic growth, and also the housing market. So keep an eye out for upcoming changes and news regarding that. And today, that's all I have for you guys today, folks. I will be doing more videos to go over the current economic state of the market, and we'll try to track it together. We're trying to time it together, and I'm trying to keep you guys as much informed as I can. And make sure you hit the like button and subscribe. I'll be having more information for you guys in the near future. Thank you.